TCIG X Spaces highlights July 2025 Part 2.
Near Protocol is an AI Aurora virtual machine that enables developers to build and scale decentralized applications, or dApps. Its Nightshade sharding mechanism makes it fast, accessible, and cost-effective, with 600 millisecond block times and 1.2 second finality, claiming to be 200,000 times more energy efficient than Bitcoin, have 10,000 times lower fees, and be up to 600 times faster than Ethereum, and even faster than Solana. Ethereum-compatible smart contracts deploy via the Rainbow Bridge and make for an efficient environment of stablecoins, having joined only 16 other blockchains with over $500 million in stablecoin supply, which is currently at $720 million. Carbon neutrality, user-owned AI agents with chain-abstracted user experience, cross-chain swaps, and chain signatures lift the infrastructure to stand out, among others. With the convergence of AI with crypto, you don't get much better than Near Protocol. Near Intents support over 100 assets, and they're approaching 1 million total swaps. Near and Bitwise, they came together in Frankfurt, Germany, to celebrate the recent listing of the Bitwise Near Staking ETP. Near was built to power a new kind of internet, one where AI serves people, not platforms. This ETP brings that vision closer to investors around the world by making Near more accessible through Bitwise's trusted products. We're accelerating the mainstream adoption of user-owned AI infrastructure. Near can lead the way in what appears to be a market trend of improving the tokenomics as more and more experts realize holders have been overpaying for these network securities. Near is a high-performance blockchain with really low fees. Near has one of the best dev experiences. Documentation is clear, logical journey, presenting from the basic anatomy and details to more complex SDKs and tools. It sets a whole new standard for blockchain interactions, especially cross-chain. Basically, users can declare an intention. For example, you swap Ethereum USDT to Bitcoin, and a network of solvers running on Near will find the best path to accomplish this task. We recently saw an impressive 465,000 worth swap happening in exactly this example, paying 0.55% of trading fees to ForSwap. According to Doom, the protocol accumulates nearly 400 million in volume since its launch in November 2024. Massive. The weekly DEX volume is off the charts. So Near DEX volumes reached an all-time high last week, with weekly volumes hitting 591 million for the 7-day period. This marks a 249% week-over-week increase from the prior week. Momentum is even more notable when benchmarked year-to-date. Weekly volumes have grown 835%. Near's long-term value accrual will not come from speculative volume or raw gas fees. It will come from protocol fees tied to intense marketplace participation and liquidity coordination. It allows users and agents to define outcomes, not execution steps. A request such as swap token A for token B is picked up by a solver network that competes to deliver the most efficient result. The user reviews a quote, and once approved, the system executes the entire transaction automatically, without requiring manual bridging or multiple interfaces. So as of July 8th, Near Intents have processed 409 million in cumulative volume. In just the first week of July, it handled 43 million. Over the past 30 days, it processed 215 million, representing more than 52% of all-time volume. With over 900,000 transactions executed to date and an average transaction size of $400, adoption appears to be exponentially accelerating. As of today, it reached 100,000 users and over 500 million in TVL. Moving on to Ravencoin. The code doesn't know what is going on in the world. It is not relevant to the function of the protocol. The code does not care what is going on in the world. Code does what it does. It does not care if country A is at war with country B, if the price of oil goes up. It does not need anything in this world that is human-made, that any decision that is made by a human is not relevant to the function of the protocol. It is an algorithm. It all functions on an algorithm. All crypto. Light bulb. Can't say enough about Ravencoin. They really supported one of our posts on RWA tokens. They are on our very first display of RWA tokens, and they showed probably the most support out of any of them. The consensus of Ravencoin is on KAWPOW. So it is a Bitcoin similar, and it's an open source token creation. It does transfers. It is asset aware. It is from a Bitcoin fork, and it's to create new crypto assets. So Bitcoin is king. From its humble beginnings, the Ravencoin community has respected and appreciated Bitcoin as the case study in secure code and a secure network, as well as the economic and monetary king of the digital world. The Ravencoin white paper credits the open source Bitcoin developers who build the code that Raven was founded on. Ravencoin is a code fork of Bitcoin and uses the same issuance method, which is proof of work mining, as Bitcoin. Prior to launch, Ravencoin had 100% of the same code as Bitcoin. The main changes were made in multiplying everything by 1,000. So there's 21 billion coins instead of 21 million, and changing the block time to 1 minute. instead of 10 minutes. And then later the asset layer was added. Like Bitcoin, Ravencoin is a fair launch proof of work. It also used the same announcement and binaries release schedule as Bitcoin. On the anniversary of Bitcoin announcement and launch, Bitcoin focuses on nation-state level security and economic stability. There's an argument that says Bitcoin should focus only on security and predictability and not optimize for things like second layer tokens. Whether on the Bitcoin chart or another chain, internet money will need to interact with digital assets. And that's why Ravencoin is a natural fit. Ravencoin assets have several advantages. There's no centralized control, no security centralization hole or shutdown authority. It's private and not linked to any centralized database or identity. It's permissionless. The unique cypherpunk nature of Ravencoin and its no-nonsense structure and governance and issuance makes it a natural fit for the token layer of the digital world. Ravencoin is a power coin that started 100% fairly, the only altcoin that's the same as Bitcoin. So if you see from this chart, it's pretty fascinating to see this breakdown here from Masari, the initial token allocations for public blockchains. So you have public sale, community allocations, insiders, and foundations and more. So all of these major coins, Solana, Ethereum, Cardano, EOS, Avalanche, Internet Computer, they all have a portion that has either gone to insiders or has some other allocation than the public sale. So Ravencoin has no pre-mine, no fundraise, no ICO, no developer reward, no founders reward. It is a fair launch and it's 100% proof of work mining. Hopefully in the future, we are working on raising some funds to start a mining facility, which we hope to be multifunctional to mine Bitcoin and a couple other coins, and Ravencoin will definitely be one of them. So we are definitely a proud supporter of Ravencoin. So Bitcoin 1.0 is digital cash, Bitcoin 2.0 is smart contracts, and then Bitcoin 3.0 is Ravencoin. Why? Because Ravencoin is built for assets, fast, decentralized, no smart contracts needed. You own, issue, and transfer. So Bitcoin 1.0, digital cash, introduced decentralized digital currency, and then 2.0 is Ethereum and others with smart contracts and tokenization. It enabled programmable contracts and diverse token creation, and then you have Ravencoin for asset issuance and transfer. It's specialized in straightforward creation and transfer of digital assets without the need of smart contracts. A very promising project here with Ravencoin. This visual is from Bitcoin Magazine. It just shows the difference in assets. So you have Bitcoin, you got gold, art, stocks, fiat, global debt, and real estate. The facts are the facts. I mean, you look at gold, has low liquidity, transportation is wasteful. It weighs a ton. It's costly to transport. There's divisibility issues. It is centralized and it is controlled. There's more found every single day, and there's like 900 trillion scattered throughout our oceans. So it's probably the most scarce thing after Bitcoin, but still, there's storage and insurance costs. T plus 1 year settlement. You can settle anything in a fraction of a second over crypto rails. So it's really a no-brainer. And I want to start with gold because everything else is even worse than that. I mean, you go to real estate, and everyone has used real estate as their safe haven because you can't really save in many other things. But even when you go to real estate, TCIG started real estate, and you find out that it is illiquid. Once you get a property, you need to hold it for a certain amount of years before you can refi or fix it up and get value out of it, and it's all doable, but there's maintenance, there's fees, taxes, other costs that every single day something new happens. There's a lot of different liabilities. It's immobile, can't move it across the world, it stays where it is. And like I keep saying, the tokenization of RWAs with fractional ownership, these liquidity providers and platforms are being built just based on the tokenization of real estate. Then you move to stocks. Stocks are coming on chain. I wouldn't touch them with a 10-foot pole now. I started in stocks. So they're IOUs. They're inflationary. They depend on a person, a human, to make decisions. Again, crypto does not. It's on an algorithm. Stocks are controlled by few, and they are easily manipulated. Insurmountable amounts of fraud. And it's T plus 1 week or down to 1 day settlement. And there's less trading hours than Bitcoin. 1971 versus 2010, 1,638 hours per year versus 8,760 hours per year. Then it goes to global debt. I mean, debt is an asset, so it's on the chart. It's out of control, influenced by radical government spending. Government leads to all problems. It can be eliminated with Bitcoin as a strategic reserve asset, and that is what is happening. And then you have flimsy art. Who wants to have art anymore? It's all moving to NFTs. Whether you like it or not, it's illiquid. It just sits around. It collects dust, and then you have to worry about transporting it and getting it somewhere, and it not getting stolen. And it has subjective valuations. There's authenticity issues, and there's no fractional ownership. And then the worst of them all is fiat. Inflationary, trust-based, centralized by the centralized monsters. Unlimited supply because the debt ceiling just raises when it needs to. Oh, how much more money do we need to print? There we go. Turn on the printers faster. And then fiat has no reserve assets. It's just a bunch of credit that floats around in computers. Not audited in over 100 years. And even if they did audit, like they would want to, what they were saying, audit Fort Knox, who's going to trust them anyway? The dollar, specifically, lost 99% of its purchasing power over the last century. And then you get to Bitcoin. Deflationary, decentralized, limited supply, cryptographic security, T plus 1 hour to 1 millisecond settlement, audited every 10 minutes, trustless, immutable, transparent, permissionless, economic energy, global access 24/7, 365, forever. It's the fairest money on earth and the top performing asset in 11 out of the last 14 years. Just gotta say, God bless Bitcoin. Big announcement last week is the Federal Reserve, the FDIC, the OCC, they all gave the green light for banks to custody crypto. So if you're not seeing it already with, your bank's interface or the app that you use, or PayPal and Venmo just announced probably one of the largest called PayPal World that will basically combine all of their digital products into crypto. So the giants are here. The most simple explanations of why crypto matters, and this one says 1 in 5 Americans eat chocolate daily. The same number who own crypto. It says, but while chocolate comes with clear labels, crypto's still missing clear rules of the road. It's time to fix that. Let's make crypto as easy to understand as a candy bar. So they put this vending machine right in the front of the White House. But anyway, the back says, instead of the ingredients, it says serving 1/5 Americans per container. Americans who own crypto, 21%. And then all these other statistics that you just pick up a candy bar and you're reading about how, like, income less than 100,000, 77%. 87% thinks the financial system needs to change. And then small businesses think adopting stablecoins would help open up new business opportunities, 55%. One of the biggest announcements from last week was that Coinbase Wallet will be rebranding to the Base app. And Base had a lot of different conferences and seminars last week that went over the Base app. There's what's called mini apps. Morpho is part of that. And Morpho just passed $1 billion in BTC-backed loans. If you're holding Bitcoin, again, just like holding Ethereum, there are a lot of options out there for you to gain liquidity of just not holding these assets. You can do a lot of things with these assets, and that's the thing about programmability, is that it can be used cross-chain. You can use it in a lot of ways, and with BTC coming, it's going to open up trillions of liquidity. The Czechoslovakian government, which I am Czechoslovakian, I am Italian and Czechoslovakian. They now just call it the Czech Republic, but their government reported an investment in Coinbase. It is their first crypto investment that has been reported. I also shared that Coinbase is at a new all-time high since 2021. So all you Coinbase haters can go away. Coinbase also announced that Coinbase won different tiers, and their base plan is now $5 a month, or $50 a year. And there's a lot of different perks for Coinbase One. The top one being to save on fees when you're converting or swapping or bridging or whatever you're doing. So many platforms out there to swap your crypto. Also, Coinbase today just offered some help for corporate treasuries. The Mag 7, there's only one company in the world out of the Mag 7 that holds Bitcoin, and that is Tesla. Tesla owns over 11,000 Bitcoin. The others out of the Mag 7, Google, Amazon, Apple, Meta, Microsoft, Nvidia, have 0 Bitcoin. All of these companies are heavily involved in crypto. Not that they own Bitcoin on their balance sheet, but they are all involved. Don't let them fool you. Wait until crypto takes over Meta and all your payments on Marketplace will be in crypto stablecoins. Well, NVIDIA, they are the backbone of AI, and AI is powered by crypto. So there's that. And if you want to mine crypto, it's probably mined with a graphics card or a miner that is built by NVIDIA. The Genius Act creates a clear and simple regulatory framework to establish and unleash the immense promise of dollar-backed stablecoins. This could be perhaps the greatest revolution in financial technology since the birth of the internet itself. It does unlock trillions in capital, and it brings banks into crypto. And like I was saying earlier, that there will be loyalty or reward systems built in for brands that if you hold some of their stablecoin, you'll earn some kind of reward, or if you buy a certain amount, then you'll get rewarded back in the form of a stablecoin. Genius Act, what it means for crypto. So stablecoins legal at the federal level, ensuring digital stability with controls on backing. Banks minting their own stablecoins, which will go into the anti-CBDC. That taps into massive reserves. There's no double dipping with collateral. Clear rules ban reuse in other investments. Regulation now clear with uniform oversight. It establishes the first clear regulatory framework for fiat-backed stablecoins in the world's largest economy. So it's the most established on-chain use case, stablecoins, with over 250 billion already on-chain. enables global access to the US dollar with near instant settlement, low fees, and 24/7 availability. So the Clarity Act is number 2 of the bills that were passed last week, and that defines digital assets. It splits oversight. It sets clear rules for trading, registration, and custody. Oh, and it also protects self-custody. It introduces a mature blockchain test. It's decentralized. It's a commodity. And if it's not, it's a security. Some open source software that can't prohibit anyone from engaging in the system based on unilateral authority. So a couple other things here on the Clarity. There's basically a pass and a fail. So a pass would be that a token is a commodity, and then the fail is a token is likely a security. So the ones that currently pass, Bitcoin, Ethereum, Litecoin, Monero, and Doge. Ones that currently fail for various reasons, XRP, BNB, or BSC, you have Solana, Tron, Aptos. It's a meaningful step towards a stronger digital asset market structure, forging a bipartisan path forward for digital asset regulation and support of policies designed to enshrine U.S. leadership in the digital era. So it was passed on July 17th. It assigns SEC oversight to investment contract assets and CFTC oversight to digital commodities. It requires digital asset firms to provide customer disclosures, segregate funds, and implement conflict of interest rules. It offers fundraising exemptions up to $75 million for projects on mature blockchains, with mandatory disclosures on code, risks, and development plans. It exempts secondary trades of digital commodities from securities laws and treats them as covered securities to avoid state blue sky laws. Oh, by the way, RWA TVL, total value locked, is at an all-time high of $6.1 billion, and 80% of that is on Ethereum. Another thing, Ethereum just hit all-time high, with 1.77 trillion transferred in a quarter across 21 million transactions. That was just USDC usage. Just USDC. El Salvador, they started buying 1 Bitcoin a day in November of 2022, so not even 3 years ago. And they're now sitting on an unrealized profit of over 450 million. This was the video I want to share from the 2-part interview with Michael Saylor and Jordan Peterson. Jordan Peterson asks, he says, why won't Bitcoin just suck the investment capital out of everything? And Saylor says, it is and it will. That's why I'm here. And that's why I'm here. That's kind of like why we're all here. When you study it enough, you understand that it is a vacuum of all value in the world. 125 public companies now have added Bitcoin to their holdings that now hold over 847,000 Bitcoin. Oh, this is another great video of Saylor saying, the more capital I raise, the more capital I can raise, which breaks every textbook at Harvard and Stanford. The world is changing. Ivy League school or not, everyone will be racing to accumulate more Bitcoin. Last week, the total crypto market, it hit 4 trillion for the first time ever. Yesterday was also the highest close in Bitcoin history. The Ether machine. PayPal executives, Consensus, UBS executives, Bitwise management. There's a Synthetix core contributor. They're now on the NASDAQ as DYNX. The head of DeFi actually graduated from the University of Pennsylvania. They want to expand Ethereum's economic security as the base layer for the next era of global finance and computation. It's not just a blockchain, it's the settlement layer of the new internet-native economy. Our mission is to activate Ethereum's full potential by delivering secure, transparent, and yield-generating exposure to ETH at the institutional level. So these 3 things here, actively staking, restaking, and compounding ETH yield, providing turnkey infrastructure for validators and enterprises, backing research, open source tooling, and Ethereum native innovation. They're not an ETF, they're not a passive track treasury fund, they are the machine for productive Ethereum. There's about, 1.5 million Ethereum in the strategic ETH reserve, about $4.5 billion worth. The time of ETH is here, and what an exciting time to be alive. That's all I gotta say.
Hop on the train and get on chain. Let's cut out all the noise and build together.